This is Learning Objective 3, Methods of Paying Wages and Salaries. Some of this might seem like no-brainers, but we're going to talk about it. The first thing that's actually listed in the text is cash, paying in cash, which is, according to the textbook, a common procedure, but I don't honestly know how often that really does happen. But basically you're putting in cash with a receipt in envelopes and handing it out. Most of you will be involved in either check or direct deposit. So with checks, lots of times companies will have a separate payroll account just for payroll checks because it makes it a lot easier to reconcile the bank statement. For one, you hardly have any outstanding checks because pretty much everybody runs to the bank and cashes their checks right away. So it's just easier to have separate accounts. I know when I used to do accounting for my father, I was like 15 and I did his payroll and I would balance the bank statement, and we had a separate bank account for all of the payroll checks, and it does make it much easier to reconcile. Nowadays there's a lot of electronic payment methods. EFTS, Electronic Funds Transfer System. From the college, we can get our pay directly deposited. There's also something called pay cards that allow the employer to deposit the payroll into a prepaid card. So the card is utilized just like a debit or a credit card. The only place where you would use this really is if employees don't have a bank account, because otherwise it's a little it's not real functional if you wanted to buy something that require, like pay your rent or something, that they don't take a debit or a credit card. They want cash or check. And there's also electronic pay stubs that come often with if they're using the electronic funds transfer, so you don't need paper pay stubs. If somebody leaves your employment, there's an issue of, when do you have to pay the final pay? A lot of states have a time limit between when employees terminate and when you pay them out their final wages. And a lot of these depend on if the worker left voluntarily or if you fired him. California and Michigan require immediate payment if the employee is fired. And there's different rules about that. The journal entries to record the payroll are pretty straightforward. There's 2 of them. And just the numbers change, basically. So, journal entry number 1, you have to record the gross wages, the withholdings, and the net pay. So let's look at that. We'll look at that in the next screen. Journal entry 2, you have to record the employer's payroll tax expense. This is what comes out of the employer's pocket, so to speak. And you have to make both of these journal entries every time you issue a paycheck, regardless of the amount of the paycheck. Doesn't matter if it's a big amount or a small amount. And these 2 journal entries are always the same in same format. So journal entry number 1, you're going to debit wage expense for gross payroll, and then you're going to credit each withholding account. They're all liabilities. And credit cash if you're actually writing a check right then, or wages payable, and that's for the net amount. So here's an example. Wage expense, debit it for the gross. FICA payable, and this has got the employer and the employee's share. It doesn't. Sorry, I take that back. It's this is what's withheld. So this is the employee's share. There's 2 employees. So you've got your FICA payable, your health insurance payable, federal income tax, state income tax, and group insurance withheld. and then the actual check that you're going to pay is credited to cash. Now, even though we're not using cash in envelopes, and we're writing a check, we're going to still use the cash account for our purposes. Journal entry number 2, this is for what comes out of the employer's pocket. You're going to debit payroll tax expense for the total of all the payroll taxes that the employer pays, and then credit each account because they're all liabilities. So this is the employee. So instead of giving us names for the employee, they've just got A and B. And these are their gross, and these are the FUTA wages that are subject still, that haven't hit the limit, and the SUTA wages. And obviously the SUTA limit must be higher, or else employee A would have been wouldn't be paying anything, but they've hit the limit for FUTA. This is the Medicare, or the Social Security and Medicare. So these are the wages. This would be .006, and I don't know what the percentage is for the SUTA, but it doesn't really matter for purposes of this example. And this is the 6.2%, and this is the 1.5%. So the journal entry, payroll tax expense, is the sum of all of these three, 190.89, and then these are just all payables: FUTA, SUTA, FICA, and FICA payable.